Hey guys, what's up? How's it going? Welcome to the REIT investing case study. This is a 100% REIT focused portfolio that I've built on this channel to track REITs to see how well real estate stocks will do versus other more common ways of investing into stocks and the stock market. Now I'm going to jump into my portfolio in just a second here and show you guys all the different REITs and show you guys how well we've done in the past and how many dividends we've been earning. But before we get into that, I just want to say if you guys do enjoy this video and if you guys do want to follow along with this investing case studies, be sure to smash that like button and subscribe to the channel if you guys want to see the weekly updates that I will be posting on this REIT investing case study. Alright, let's jump into the portfolio and let's see how our REITs are doing for this week. Alright, so some of you guys might be wondering what happened to week number 16 of this REIT investing case study. So basically last week I did an entire stock portfolio update where I gave you guys an update of all my different investing portfolios. So basically what I did is I decided to use that video as the update for last week. So if you guys missed that video, check it out. But otherwise that's where last week's update went, just in case you guys were wondering. I felt like I didn't need to make another video if I already published it. So anyways, this is this week's. This is the REIT investing portfolio. We have $1,497 Canadian in this portfolio right now, and we are currently down $112 all time, which is 7%. So the market had a nice little jump and then it went back down. That's basically what happened. If you guys remember last week, everything kind of had a nice little rise in the market. Both my portfolios, my reinvesting portfolio and my dividend portfolio and my main wealth simple portfolio were all in the greens, and they all rose up quite a bit, but then they went back down. So that's kind of just expected, but it's interesting to see how the markets are going and whatnot and how things are doing. So here's the portfolio overall. But once again, because we are regularly putting investments in on a weekly basis, we're putting about $100-ish a week, the portfolio has still continued to grow, and their dividends are still rolling in, and the portfolio is doing really well. So I'm pretty happy with it overall. And once again, the whole purpose of this portfolio is to mimic real estate as if we bought real estate, but do it in a way where we don't have to over leverage ourselves or get big loans or anything like that. I like to avoid debt. I'm not a big fan of debt and all that kind of stuff. I prefer to basically invest into stocks and have as little debt as possible in my life. And that's just the way I do it. So that's why I decided to go with REITs. And I've always wanted to invest into real estate, but once again, I in order to get started into real estate, you either need to have a lot of money, right? Or you need to take out big loans to pay for properties, and then you have to do all this stuff. And I'm super inexperienced when it comes to any of that stuff. So I just took the easy route. I picked some REITs, and that's why I started this case study. So here's the portfolio here. As you guys can see here, this is 100% Canadian based. You can use whatever different REITs you want, wherever you want. I picked Canadian REITs because at some point in time, I'm probably going to move this into a tax-free savings account. Once I approach my contribution limit towards the end of this year, I'm going to kind of figure out what I want to do, what I want to keep in my tax-free savings account. And I'll probably be putting my REITs in there since then I can earn the dividends tax-free, and just it makes things a little bit more easier when it comes to doing taxes and whatnot. But we'll see. I'm not 100% sure on that yet. So the first stock we have here is hr.un. This is H&R Real Estate Investment Trust. I did a video on this a little while back. I think it was a couple weeks ago. I talked about how I was buying this stock, and I still think I thought it was a pretty good price, and I still think it is pretty good. And this one right now we bought, I think we bought it a couple weeks ago, and we are currently sitting at a 10% return. For this stock, and it was super cheap. Like, it was like $8 a share. It went down a lot, and then when everything went back up, this particular stock kind of like went up a little bit, but it kind of didn't jump. So I kind of figured, hey, well, if everything else is going back up, they should kind of jump up eventually, kind of thing. And it turns out pretty good. We're looking at a 10% return so far, obviously. I mean, we're still waiting on how things are going to go. And in terms of dividends, they have cut their dividends, so the dividend will be a little bit less. But I'm okay with that. I don't really care. Once again, like a lot of these REITs I invested into when the stock market kind of crashed. So I know they're going to jump up, and that's where most of our returns are coming from. And like the dividends will probably get cut for most of these companies, but everything's getting cut at the moment because a lot of businesses reported losses of income in the first quarter of this year. So most dividends across the board are getting cut. But the thing is, like the growth that we got from investing into those stocks when the market was cheap kind of makes up for it in the end anyways. So the next one we're going to talk about is REIT. This is once again a really popular Canadian REIT that we have here, and we are sitting at a 9% return overall, so a nice little return here. It's $13. Once again, we don't have a lot of shares in these companies. I'm working on building them up, and once again, every single week I'm kind of like I'm kind of the fan of buying into all of them evenly, and I think that's what I'm going to start doing every single week. In fact, that's what I'm going to be doing this week, is I'm going to be kind of like trickling my money into all these different REITs that I have right now, because I do think all of these REITs are really good, and as you kind of see, that they're continuing to perform really well. Next one we have is REIT, which is CI First Asset Canadian REIT ETF. This is an ETF. We have 13 shares sitting at 12%. Once again, very, very good return. I think REITs overall in the future will continue to rise, and when the market crashed, if I had more money, I would have bought more into REITs, but it's just one of those things that you kind of wish you had more money at the time, but nobody could predict when the crash was going to happen. But that's okay, because I'm still going to keep investing in REITs, and I still think they're going to grow over time. I don't think real estate is going to slow down anytime soon. Next up we have is VRE. This is a Vanguard Canadian Capped REIT Index, and once again another ETF. And this one is a little bit lower, but keep in mind that we invested into this one when we started our portfolio. So this one we bought when it was kind of sitting a little bit higher, and then the market crashed, and that's why we're sitting at negative 8% overall for this one. So because we invested into this one before the crash, naturally it's going to be a little bit lower, and that's just kind of expected. Same with XRE. This is another Canadian iShares REIT ETF, so lots of different REITs inside this one, and once again it's sitting at negative 13%. But once again, this is because we invested a lot into this particular ETF before the crash happened, so we're still kind of waiting on them to recover, but I'm still going to keep investing into them, because the price is cheaper now, and I think as the price starts to will go up over time again, we'll kind of offset some of that loss by buying it at a cheap price. So we're just going to keep investing like we always do. And next up we have, the last one we have is ZRE. This is a Bank of Montreal ETF, and we are sitting at negative 8%. So once again, this is one I believe we invested before the crash. So we have a nice little mix here. As you guys can see, if you invest into the crash and then the markets jump up, you really sit at a nice return. But conversely, everybody who invested before the crash, your portfolios are probably sitting at a little bit of a dip, right? And you're kind of waiting for that recovery to happen. And that's kind of where I'm at with most of my portfolios. I'm kind of like almost breaking even, but a little bit still a little bit in the negative in most of my portfolios, but I'm okay with that, because once the markets rise back up, because I have so much invested in my other portfolios, it's going to jump up a lot, so I'm okay with that. And this week I'm just going to be buying about $100 into all these shares. So I'll probably buy like 1 or 2 shares of each, maybe like 1 share of each kind of thing. And that's what I'm going to be investing for this week. So hope you guys enjoyed this little portfolio update. Before we end the video, I'm going to go over my dividends really quickly here, just to show you guys the dividends that we got. Whoops, that's not the right tab. We go to activity. Show you guys my dividends so you guys can see all the different dividends we're earning from this portfolio. And I like to update it every single week so you guys can see how our real estate is giving us nice little returns here, kind of like our rental income if you want kind of thing. So here's the end of May, which you probably seen in last week's video, the video before that. We have a couple dollars coming in from these different REITs here. You can see it's just a couple bucks for now, but it's slowly starting to add up. Like when we first bought them, it was like really, really low, right? Just like a couple cents here. But then now it's starting to get into a couple dollars. And towards the beginning of June, we got $1 from ZRE. H&R gave us 75 cents. RioCan gave us $1.20, and then VRE gave us 73 cents. So they're slowly starting to rise up over time. And I'll bring up my investment spreadsheet so you guys can see the earnings that we have to date for this portfolio. And once again, here's our investment spreadsheet where you guys can see all the earnings we've made from when we first started this portfolio back in March. So our first month we got $1.29. Our second month in April we got $2.28. Our third month we got $4.36, and then in our fourth month already in June, it's June 14th as I record this video, we're sitting at $3.76, and that's a total of $11, and I think that's 5, 6, 7, 8. Yeah, that is all added up together. So $11 so far, and after 4 months, I guess 3.5 months on the portfolio, but we're still kind of growing as time goes on. Keep in mind that REITs are something that, like, as you invest into and you put more money into, just like dividend stocks, they will grow over time. So if you guys enjoyed this video, please let me know what you guys think in the comments. Please give it a big thumbs up, and I will link to the entire playlist in the description if you guys kind of want to watch the older videos. But if you guys are enjoying this video, be sure to check out my dividend investing case study. It's another investing series that I do on this channel where every single week we put money into dividend stocks, and we're just trying to grow our income on a passive basis. And I kind of show you guys my journey that I do with investing into stocks and whatnot. So I'll put a link to an end screen up in the video if you guys want to check out that playlist. I highly recommend it. But other than that, guys, thanks for watching the video. Hope you guys have a good day, and take care.